Hi, this is Dan Collins, Editor-in-Chief of Futures Magazine, coming to you live from the floor of the Chicago Board of Trade on Tax Day 2015 for Traders Exclusive. I want to talk about several markets and how trading and markets have evolved. The modern trader needs to know more than simply technical information or fundamental information. He needs to trade more than just futures. Trading is a three-dimensional game, and it's more important than ever. Just a couple of markets I want to point out. Interest rates, a 30-year bond. In the midst of a 30-plus year rally, they're supposed to have gone down. They're supposed to have gone down with tapering, but they haven't. They're hitting new highs. It's been a stubborn market. Look at gold. Gold, the QE 1, 2, and 3 was supposed to create huge inflation, but gold is more than 50% off its 119 high. Where would it go? We don't know. Right now it's in an equilibrium. But in order to trade it successfully, even if you're right on the call, the volatility has been so great that you really needed to use options to be able to exploit that further. Look at crude oil. The same analyst said there's no way in heck that it can go below $80. All of a sudden, a couple of weeks ago, we're calling for $30, $20 crude oil. What we know about crude oil is right now it's stuck in a range. Some people think it's bottomed, but technically that hasn't been proven, and crude oil has followed the technicals. It's followed the technicals even though we're in a world with geopolitical risk, with the U.S. battling over a potential deal with Iran, with a hot war going on in Yemen and other hot spots in the world. Despite this, crude oil followed technicals pretty strongly. It's stuck in the $10 range. Today we're near the top of that range. We'll see where it goes. If it breaches that, maybe it can prove that the bottom was hit, but you know, looking at all things, it hasn't been proven yet, and it could still go and touch that early 2009 low around $32. The point is, today, for the modern trader, which is who's watching this, you need to look at trading in a three-dimensional world. You need to, whether you're trading futures, equities, ETFs, you need to utilize options. You need to look at the fundamentals as well as the technicals, because other people are trading it and they're trading size with it. So it's going to affect the market. It's an exciting period in all these sectors. Look at the Fed. Recently, we have people talking about maybe something won't happen in 2015. That seems crazy. We've been at zero for 6 years. That's patience. That's a long term. June should be a rate increase, and it's only 25 basis points. So I don't know what the controversy is, but now people are bringing in the idea that maybe they can't do it now. I think they're wrong. I think they'll do it in June. The market may react to it. The bottom line is, modern trader, you need to look at all these things. You need to understand what the Fed's doing. You need to understand what the effect of the dollar, now that it's approaching 100. Market reacts differently to fundamentals when the dollar is above 100 than when it was trading at, say, 90, the dollar index. It's all part of what the modern trader needs to do. So just updating you on that. Use options, use all the tools, look at the technicals and the fundamentals. It's been Dan Collins, Editor-in-Chief of Futures Magazine for Traders Exclusive.